You want to get the new strategy on how to answer the journals in the exam? Hi grade 10 learners, welcome to Chawalala Accounting Tutoring. So on today's video, we are going to talk about cash receipt journal, debtors allowances journal. So without waste of time, let's go to question number 3. Journals. The following information was taken from the record of Rabada Traders with the owner Kagiso Rabada for July 2024. Rabada Traders sells a variety of goods at a profit margin of 50% on the cost price. Goods are sold for cash and on credit. So okay, here they are telling us here our markup is 50%. Markup MP is equals to 50%. Then our cost price, guys, always equals to 100%, meaning our selling price is going to be 150%. Then we are going to use these ones whenever we want to calculate our sales. Let's take if we were given only cost of sales, we're gonna use these ones to calculate the sales. If we are given only sales, we're gonna use this one to calculate cost of sales. And then let's go to 3.1. And then 3.1.1, we have cash receipt journal. We go straight to the information. We're not going to do 3.2 and 3.3. We have transaction July 2024. Cash sales per cash register roll 12,300. So cash sales, as here we received money from our sales, meaning we are going to record this one under cash receipt journal. Our document number is going to be cash register roll, which is CRJ. CRJ. Then our day 1. Then details, it's we're gonna say case sales. Then analysis of receipt, you are going to record that amount, which is 12,300. Also under bank, we are going to record 12,300. Then we are done with first transaction. We go to the second one. Both trading stock from Su Traders for 4,100, EFT number 923. Okay, so here we are not going to record this one, since here we are focusing only on cash receipt journal, debtors journal, and debtors allowances journal. So meaning we're gonna skip this one since they didn't ask us to prepare the cash payment journal. Then the following transaction, goods sold on credit to J. Kalis. Okay, here as we were selling goods on credit, we are going to record this one under debtors journal, not under cash receipt journal. We are going to record under debtors journal. And then the first one says J. Kalis 2,760. That 2,760 is for sales. And then cost price, it's 1,840. Invoice number, it's 103. Then let's record this one. Our document number, it's 103. Then our debtor, it's not our debtor, the day, it's 7. Then our debtor, it's J. Kalis. Then our sales amount it's 2,760. It's 260. As you can see, we are already given, there's no need to calculate. And then our cost of sales is 1,840. So another thing, guys, you have to know, you should be aware that sales always should be it should be more than cost of sales. Yeah, sales should be always, yeah, sorry, I made a mistake. Supposed to be only 10. Yeah, as I was telling you, sales will be always more than cost of sales. Then we go to the second one. It says as Shamsi 7,200, which is for sales. Then cost of sales is 4,800. Then the document number here is going to be 104. Then there's no need to write the day because still 7. Then our debtor is as Shamisi. And then the sales amount it's 7,200. Then the cost of sales it's 4,800. So yeah, we are done with this one. So as I was telling you guys, sales should be always more than cost of sales. As you can see here, 7,200 is more than 4,800. So the reason we are recording these two under debtors journal, that's where we record all the amounts that we owned by the certain people. As here we have J. Kalis and S. Shamis. Here we sold goods to them, meaning they owe us as the business, meaning we have to record under on our books, which is debtors journal. And then we go to the next one. As Shamisi returned goods with a cost price of 800, credit note number 29 was issued. Then here our document number, it's going to be 29. Then the day going to be 10. Then our debtor is as Shamis. So okay guys, the reason we are recording this one under debtors allowance journal, whenever they talk about returning, meaning the customer was returning that goods back to the business. So whenever they talk about the return or credit note, you have to record that transaction under debtors allowance journal. That's where we record the return from our customer. Yeah, that's where we record our return from the customer. Then they say cost price it's 800. We are given only cost price, which is 800. And then the selling price, we don't have selling price. As you remember, our markup equals to 50%. Then our cost price doesn't change, always equals to 100%. Then meaning our selling price is going to be 150%. How do you get 150? He says 50 plus 100, which is going to give you 150. So now we have to calculate the sales amount. So we're gonna check this at 800 for cost of sales. 800 multiplied by, then we're gonna use that method. You say what you want divide by what we have. What do we want? We are looking for the selling price, which equals to 150%. 150 divided by what do we have? We have cost of sales, which is cost price. We have 100, which is going to give us 1,200. So this is our selling price. So we're gonna record here on sales. You can see it's also bigger than cost of sales, meaning this is correct. Make sure that you subscribe, like and comment under this channel so that you can be able to access the next videos when we upload. Then we are done with this one. We go to the following one. The owner K Rabada increased his capital contribution with 50,000 by a direct deposit into the bank account of the business. So this one is going to affect cash receipt generally, since the owner K Rabada decided to contribute 50,000 into the business. So this one, our document number, it's going to be bank statement. You're gonna write our document number, you're gonna write BS. Yeah, just write BS. But this one, you're not going to get the marks for this. And then our date, 15. Then details, it's K Rabada. And then analysis of receipt. We are not going to write analysis of receipt, as here we were not receiving here, but the owner was contributing the money in, like the owner was increasing the capital with 50,000 into the business. So meaning this one is going straight to the bank. So we're gonna record, we're not receiving, it's going straight to the bank. It's not like you are depositing so into the bank. So this one is going straight to the bank, which is going to be 50,000. 50,000. Okay, if you can see, and on this one, on the first one, sorry for the inconvenience, we were not done with the first one. Let's go back to number one. Case sales per register roll of 12,300. Okay, as you can see, we wrote the document number already, the day, details, analysis of receipt, and we recorded the amount under bank. So here we are also going to record this amount under sales, since we are selling. We are going to record 12,000. We are going to record 12,300. So we also have to calculate cost of sales here, since where there is sales, it goes with cost of sales. You should know that always. Then how do we get cost of sales? Here we have sales. We are still gonna use the same method. 2,300 multiplied by what you want divided by what you have. We are looking for the sales. Our selling price equals to 150 divided by our ASCIIs. We are looking for 100%. We are looking for the cost of sales equals to our cost price equals to 100 divided by 150. We are saying divide by 150 because we have sales which equals to 150. So it's going to give us how much? 8,200. So we're gonna record 8,200 here. So we are not going to record under sender account anymore, since we already recorded under sales and cost of sales. Even if like we are going to record under debtors control, meaning we're not going to record under sender account. Then let's come back and finish this one for Kairadaba. We already recorded it's 50,000 under bank. Let me fix this one also. 50,000. And then I said we won't record this one under analysis of receipt, just because here we were not receiving, but the owner was depositing, was increasing his capital by 50,000. So we're gonna record straight to the bank. And then as you can see here, we don't have the other column where we can record this money. We have sales, cost of sales, debtors control. And then this money is not for sales, it's not for cost of sales, it's for not debtors control, but it's for it's a capital that is contributed by the owner. Meaning, if we don't have any column for this one, we are going straight to sender account. Then under amount, we're gonna say 50,000. Then details, you're gonna write capital. Then we are done with this one. We go to the following one. He received 1,200 from J. Callis as part of his account receipt 101. So okay, this one we were receiving the money from J. Callis as part like actually J. Callis was our debtor, so now it's paying back our money. So how are we going to approach this transaction? Our document number is going to be 101. It's going to be 101. Then date is going to be 17. Then details is J. Callis. Then here we are going to record an analysis of receipt, just because here we were receiving the money from the debtor, which is J. Callis. Then that amount, it's how much? 1,200. Then this money is obvious, it's going to the bank. When we receive that money, it's also going to the bank. We're gonna record this money under bank. And then here we have the column for debtors control. So this is J. Callis, it's our debtor. So here we're gonna record this 1,200 under debtors control. So whenever you record the amount on one of these sections, which is sales quote of sales and debtors control, you're no longer going to record under sender account. But if we didn't have the column for debtors control, meaning we're going to record this amount under sender account, we're going to write 1,200, and the details we're going to write debtors control. But now we are not going to do that, since we have the column for this one. Then I hope I'm clear with this one. And then we go to the next one. Credit note. As I told you, that credit note, we are talking about the returns here. We are talking about the returns. So okay, return learners, before I forget, make sure that you verify everything with your calculator, because sometimes we can make a mistake, as like you know that we won't be able to record and fix all the errors on the videos. So make sure that you verify all the calculations using your calculator. And then it says credit note issued to H. Amla 675, which is sales. Then cost price is 450. Then our document number is going to be 30. Then the day it's 23. Then the debtor, our debtor is H. Amla. And then our sales amount is going to be 675. And then our cost of sales is going to be 450. So yeah, I told you that under debtors allowance journal, we are recording returns or the credit note yeah. So do not forget these, guys. Do not forget these. We are done with this one. Then we are going to the following one. Okay, before we go to that one, we skipped another transaction by mistake. We are doing a lot of mistakes on this video. If you can check on the, which is day 17, if you can check there, there is this transaction. They received the rent for July 2024 from Tinet Q the Cock for 2,200. So that one we are also going to record under here. It falls under day 17. And then our details we are going to write what? It's Q the cock, Q the cock, then under analysis of receipt we are going to record 2,200 we were receiving here, so we have to write this amount under analysis of receipt. Then also bank, we are going to say 2,200 because after receiving this money we is going straight to the bank. And then this amount is for what? It's for rent income, and here we don't have column for rent income, meaning we are going straight to sender account. Gonna say 2,200. Then the details, it's rent income. Then we can go to that one for day 25. Day 25, since we're fixing the one for day 17. Then it says received 45,000 from VPS Bank for a fixed deposit that matured. This amount included interest of 3,800. The amount was transferred directly into the bank account of Rabada Traders. Received 45,000 from VPS Bank for a fixed deposit that matured. This amount included interest of 3,800. The amount was transferred directly into the bank account of Rabada. This one, our document number, we're gonna say it's BS, then date, it's 25, then our details, VBS Bank, then we are not going to record this one under analysis of receipt, as this one it's our fixed deposit, this one. So we are gonna record exactly to the bank. We're gonna record how much. We're gonna record 45,000. Then here, as you see, we don't have the column that tells about fixed deposit, meaning we are going to send the account. But what we're gonna do, as you can see there, we also have the included interest for 3,800. So we have to record that amount separately. So what we're gonna do, firstly, you're gonna say 45,000 minus how much? Minus 3,800 for the interest, which is going to give us it's 41,200. So firstly, as I said, we're gonna cut this one separately. We're gonna, this one, it's 41,200, guys. It's 41,200. So we're gonna record this one firstly, 41,200. We wanted to see that fixed deposit before interest. Then this one we're gonna say fixed deposit, under details, fixed deposit. Then here we're gonna record the interest, which is 3,800. And then this one at the interest income. We are done with this one. We go to the last one. The bank statement from ABBA Bank reflected the following: interest of 360 on the favorable bank balance. And then our document number, we're gonna say it's what? It's BS. And then the date 28. The details, it's A B B A. Then we're not gonna record on under analysis of receipt, because here we are not receiving here, but we are getting the interest for having for the favorable bank balance, meaning here we were having positive balance in our bank account, so we are getting interest for that. So you're gonna record that money straight to the bank, which is 360. So as you can see here, we don't have a column for the interest and what. We're gonna record that amount here on sender account, which is 360. Then under details, you're gonna say interest. I don't have enough space here. Interest on current account. Then return learners, we are done for today's video. Thank you.